Oil prices surged again, climbing above $100 per barrel, even after a plan was announced to release a record amount of emergency oil reserves. The increase happened after several cargo ships were attacked in the Gulf, and Iran's newly appointed supreme leader said the country would continue blocking the Strait of Hormuz, one of the world's most important shipping routes for energy supplies. The price of Brent crude rose more than 9% on Thursday, reaching $101.59 per barrel, before settling slightly lower at around $99.44. The spike occurred despite the International Energy Agency (IEA) announcing that its member countries would release 400 million barrels of oil from their reserves. The move is intended to reduce the economic impact caused by the ongoing conflict between the United States, Israel, and Iran. However, investors remain worried that attacks on ships and energy infrastructure around the Strait of Hormuz could continue, which would slow the recovery of the global economy. In his first public statement since becoming Iran's supreme leader, Mojtaba Khamenei said Iran should continue using its ability to block the Strait of Hormuz as leverage. The strait is a crucial passage for oil and liquefied natural gas shipments, and concerns over possible attacks have effectively shut down much of the traffic moving through it. The surrounding region also contains major refineries that produce jet fuel and diesel, meaning disruptions there could have wide-reaching effects on global energy supplies. A spokesperson for Iran's Islamic Revolutionary Guard Corps warned that any ships connected to the United States, Israel, or their allies could be targeted. They also claimed that oil prices could rise as high as $200 per barrel due to the instability. Financial markets reacted negatively to the rising tensions. Major stock indexes in the United States and Europe declined, with the Dow Jones and S&P 500 both opening about 1.3% lower, while the Nasdaq dropped 1.7%. European markets also fell, and Japan's Nikkei index closed down by about 1%. The IEA described the situation as the largest supply disruption the global oil market has ever experienced. According to the agency, several Middle Eastern countries, including Iraq, Qatar, Kuwait, the United Arab Emirates, and Saudi Arabia, have reduced oil production by at least 10 million barrels per day. Restoring production could take weeks or even months, depending on how quickly workers, equipment, and infrastructure can safely return to the affected areas. Although the release of 400 million barrels from global reserves is significant, experts say it may only provide temporary relief. Global oil consumption exceeds 100 million barrels per day, meaning the reserve release may not fully offset the roughly 20 million barrels per day of supply being lost from the Gulf region. Analysts say this is why prices continued rising even after the announcement. Markets had already expected the reserve release and had already factored it into pricing. Oil prices have been extremely volatile since the conflict began on February 28th, when the United States and Israel launched airstrikes on Iran. Before the conflict started, Brent crude was trading around $73 per barrel. Earlier this week, it briefly surged close to $120 before falling and then rising again. Higher energy prices are now raising concerns about global inflation. If fuel costs continue rising, central banks may delay plans to cut interest rates or even consider raising them. For example, the Bank of England had previously been expected to lower interest rates this year. But analysts now say rate cuts may not happen, and increases could even be possible if inflation worsens. The effects of the crisis are also being felt across Asia, where many countries depend heavily on energy imports from the Middle East. In places like the Philippines, Thailand, and Vietnam, long lines have formed at gas stations as people rush to fill their tanks. To conserve energy, Thai authorities have asked many government employees to work from home and are discouraging non-essential international travel. The Philippines has also introduced a 4-day government workweek to reduce energy consumption. As oil prices soared, everyday citizens began feeling the pinch. In cities across Asia, gas stations saw unprecedented lines as anxious drivers filled their tanks, fearing further increases. In the Philippines, frantic motorists rushed to secure fuel, while in Thailand, authorities urged employees to conserve energy in any way possible. Workers in Bangkok, uncertain about the future, hesitated to travel into the city as their commute became fraught with the potential of rising costs. Businesses felt the pressure, with many small shops reporting a decline in customers as people tightened their budgets. Meanwhile, in Saigon, similar scenes unfolded as families made difficult choices, prioritizing essential goods over luxuries. The fear of rising fuel prices triggered not just panic at the pumps, but also uncertainty within local economies. In Hanoi, shop owners watched as patrons filled their baskets with only the necessities, leaving luxury items untouched. The atmosphere was rife with anxiety. Markets, which typically thrived on bustling activity, felt a stark decline in foot traffic. As citizens adjusted their spending habits, the ripple effects were evident. Families began discussing meal plans centered around cost-effective ingredients, with online forums buzzing about budgeting strategies. Local entrepreneurs mulled over how to adapt their services, hoping to remain viable amid the looming economic strain. As the situation unfolded, governments across the region sprang into action. In Vietnam, officials held emergency meetings to assess the impact of soaring oil prices on transport and logistics. With the threat of sustained inflation, policymakers discussed potential subsidy measures to shield the most vulnerable from escalating costs. While in Thailand, the finance ministry considered tax adjustments to ease the burden on consumers. Meanwhile, in the Philippines, President Marcos urged citizens to remain calm and assured them that measures to stabilize fuel prices were being explored. The tense atmosphere spread through the streets, where vendors reported fewer transactions and growing unease about the sustainability of their small businesses amid soaring operational costs. As anxiety spread across Southeast Asia, the weight of rising energy prices took a significant toll on daily life. In Jakarta, families began altering their transportation habits, carpooling more frequently, and opting for public transportation to stretch their budgets further. The streets were less congested, as people sought alternatives to costly fuel, their eyes cast toward currency fluctuations and government responses. Meanwhile, social media platforms buzzed with discussions about community gardens and shared resources, as neighborhoods rallied to support one another amid the uncertainty. In the heart of Kuala Lumpur, food vendors expressed their concerns over dwindling sales, fearing how the ongoing crisis might alter their livelihoods. Small business owners banded together to share tips and strategies, advocating for more robust government intervention and urging customers to shop locally to keep their businesses afloat. As the economic strain continued, local governments introduced various initiatives to ease the burden on citizens. In Bangkok, workshops emerged, teaching residents how to grow their own vegetables, while community organizers distributed information on local food co-ops. In the Philippines, neighborhood groups mobilized to share resources, creating carpool networks to minimize fuel expenses. Individuals became more resourceful, swapping goods and services while sharing tips on thrift shopping. In Saigon, community markets began offering discounts on essential goods, aiming to support families struggling with rising costs. The spirit of resilience grew stronger as people adapted to the changing landscape, finding innovative ways to make ends meet amidst this economic turmoil. As the crisis unfolded, local analysts took to news platforms to discuss the potential long-term impacts of the oil crisis. Financial experts warned that unless a resolution emerged swiftly, inflation could spiral out of control, forcing companies to raise prices across the board. Consumers braced for further cost increases, particularly affecting essential goods such as food and transportation. In response, some businesses started outlining plans to adjust their pricing strategies, hoping to remain competitive while navigating the turbulent market. The conversations echoed in community centers, where residents gathered to discuss how to weather the impending storm, pooling resources and ideas to confront the challenges ahead. Their determination fostered a sense of solidarity as neighborhoods recognized the necessity to look out for one another amid the mounting pressures on their wallets. In Jakarta, local news outlets broadcast stories of families banding together to help one another through resource sharing and cooperative efforts. Community centers transformed into hubs of support, offering classes on budgeting and frugality, where attendees exchanged tips on maintaining their livelihoods amidst rising uncertainty. As rumors of further price hikes circulated, anxiety became palpable. Parents worried about their children's futures in an unstable economic climate. In neighborhoods throughout the city, the resilience of the community was tested. but the spirit to adapt and thrive remained unbroken. People took solace in small acts of kindness, whether that meant sharing meals or providing transportation, demonstrating a united front against the escalating crisis. As the situation intensified, the dialogue shifted from panic to practical solutions. In Hanoi, grassroots organizations started organizing community forums aimed at sharing budgeting techniques and energy-saving tips. Residents gathered in local parks, exchanging ideas on how to cut expenses without sacrificing quality of life. The air was filled with a mix of uncertainty and determination as people sought to navigate the challenges ahead, united by a common goal of resilience in the face of rising adversity. The unfolding crisis has not only tested the economies of Southeast Asia, but has also showcased the indomitable spirit of its people. Across the region, communities rallied together, fostering solidarity through innovative solutions and support initiatives aimed at creating a more sustainable future amidst adversity. The resilience demonstrated in the face of soaring prices became a beacon of hope for many, reminding them that unity can thrive even in the toughest times.